If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. As you've seen the title already, you're probably getting a little bit excited. We will go over to the weekly time frame so I can show you the huge bullish signal that has now flashed, but we need to analyze the 4-hour and the daily time frame first. So stick around, stay tuned, like, subscribe, comment, and share so we can hit 7.5k. We're now under 300 subs away. I think that's possible before the end of this year. And if you want to get educated, wait until the end of this video or use the links in the description. Now, we created the reversal wave and we met the 1 fib level. We haven't met the target out of this double bottom yet. It's slightly above maybe the $114 mark. That's totally fine. That hasn't been met yet. Essentially what we were explaining in yesterday's update, and we marked out this key level and was essentially saying that going forward we need to maintain that. We came down to the 20 moving average and confirmed it as support, which means that we want to continue in this uptrend in the immediate short term, so the direct next candles. As you can see in the past, I know this has been ranging a lot, but when we are actually trending the 20 moving average, you can see how it's being used. Just hold above it and we just continue higher and higher and higher. Yes, when we're ranging, consolidating, the moving averages aren't really your best friend, so we just mark out the ranges, supports and resistances, and we were using this as our range low over here for some time, if you remember, where we lost it and I said reclaim it, confirm it, and that's why when we reclaimed the 200 over here, I knew we were going to continue higher. That was all explained in the last few updates. I don't really want to go too much into it. It's already been explained. You can just watch previous videos. So now heading back into here, we have, of course, reclaimed all those moving averages, continue this uptrend, and now we're getting that trending market again, aren't we? Before it was ranging a bit, but now we're getting that trending market. We've created the reversal wave. So essentially, to continue with the follow through, you need to hold that reversal wave area, which is the lowest point, the 0.5 Fibonacci. This was the level in yesterday's update, which I said, now that we are dumping, we can't lose 103. So continue to hold 103 to 105. Now that we got the 20 bounce at 106, we just need to now break out of the 1 fib level. Very important to see a 4-hour candle close above the 1 fib level, and then we can get this continuation, because as we've created the reversal wave now, and as long as we hold above 103, all of these targets to the upside are now valid, bringing a percentage return if we meet the final one of 30%. Now, yes, it's not the greatest, but now let's go over to the daily time frame and go over why we believe that 130 is going to be a key level of resistance going forward. So we've been ranging throughout the whole year, and we were using $94 this wick right over there to about the $100 area right over here as support throughout the whole year. When we lost it, it was to meet a technical target out of a shoulder, head and shoulders pattern. Once the target was met, we reversed and reclaimed and confirmed that level. That's what the range, the whole point of the range was this last month and a half, 2 months, from October, the end of October time. So we've just essentially had a fake out. Now this is where the pattern comes in, because if we're holding a support, losing it, and then reclaiming it and confirming it as support and actually seeing a breakout, this is very significant. It's why it's in the title. This is a huge bullish indication that we're looking for a reversal, reversing from a downtrend after losing the support back up into an uptrend by reclaiming that level and confirming it as support. We will scale to the weekly time frame and I will show you the pattern, but if you just understood the explanation that I said, you should already know the pattern, or you could be seeing it right now on the daily. But it's also appearing on the weekly a lot clearer, because right now there's a lot of mess. Let's now condense it and look at it on the weekly. But very briefly, I have to run through the moving averages for you guys. So what I'm looking at right now are the 55, 20 and 200. The past few weeks I was suggesting there's that EMA repel. Let me get rid of all these drawings for you guys. So essentially back over here, we needed that purple one to cross above the 200, the white one, for this continuation. So we had already broken out and we were just looking for follow through to 130. However, we need to see this crossover to happen to confirm this breakout. As we got an EMA repel, it sends us in a slingshot motion down, but we very importantly reclaimed those levels. Now we had another EMA repel over here because we saw the breakout but no cross, and that's a very scary signal that's going to push us into a downtrend. We've had multiple chances, 2 separate occasions where we lost the moving averages, were looking for continuation lower, but eventually reclaimed them and confirmed them as support. And right now on this breakout that we've seen the past couple of days, we finally got that crossover, invalidating any downside. It was very annoying, but the main point of this range is that it never lost the $94 to $100 key area of support marked out by these 2 blue lines over here. So we were just pretty much reclaiming it and confirming it as support. And now all the moving averages have also been reclaimed. We're just looking for further continuation to the next level of key resistance. So that would be the golden pocket. I do have a $130 target, but you can already see at this 0.5 at 117 there is a lot of resistance over here. So that's going to be the next thing that we have to face. What could happen is we might get a little rejection and then break through, just like that, where we fall back to this area as support and then look for that 130 next, essentially. So I'm now going to show you the exact pattern on the weekly, but through all of the explanation, depending on whether you're really advanced or not, you might have either seen it or understood from my explanations. So if you're not getting it, that's why if you want to get educated, just message me on Twitter. Links are down below. Now, it's quite confusing now. There's a lot on the screen, but the pattern that I'm seeing, it's very clear to me that this is an inverse head and shoulders pattern. Some of you might call it cup and handle. It really doesn't matter. Those cup and handle people will say this is the cup and this is the handle. Most of the time, guys, the cup and handle is just an inverse head and shoulders, and people are ignoring the left shoulder here. So left shoulder, head, and right shoulder. And anyways, when we're talking about head and shoulders pattern, the head is always the fake out, the shoulder is the true resistance, or in this case, the true support. So let me now just turn on those drawings again and mark this all out for you guys. So this was the true support. Look, already marked out. It was $100, a key psychological level. So we knew that this is the true support. We lost it, reclaimed it, and confirmed this area as support. So that was the true area of support. This was the fake move to the downside. We've then created a shoulder, head, and shoulder, and then the neckline that needs to be broken is what's going to validate the pattern. And if I now quickly just remove all drawings and draw this neckline for you guys, it goes through the bodies just like that, through the bodies, and then we'll get you your technical target, which will be from the lowest body back up into there, pretty much just measuring the move up into it, into the neckline. And then on the breakout, which we've now seen today or in the past couple of days, first of all, we need the weekly to close out bullish. So weekly needs to close above the neckline, $103. Wow, interesting. What was the level we said on the 4-hour and daily needs to hold? $103. So we got some further confirmations, further confluence. We do of course need a close above the 55 as well. Otherwise, you can see previously when we get rejected, it does result in lower. So we need to of course break out this weekend. Sunday's close needs to be above 107. I would then say if it is closing below, you still got the 103 protecting you or the 20 protecting you. But yeah, we just want to see the follow through now to validate this pattern. We don't want another fake out where this is a false move to the upside and we are actually continuing lower. Right now, it's a false move to the downside. We've reversed, reclaimed that key support, created the right shoulder and have broken out, and our technical target sits at the price of 128. How interesting is all of this, guys? You seeing everything that we're saying is already like getting further confirmations. Essentially, we don't need all these other things, but when we add them, like the patterns and all of the Fibonacci's, they're essentially just showing us what we already were anticipating, that this key area was going to be a level that we would face in the future and struggle at, because it was a neckline of a previous double bottom. Let me go to the daily to show you that a bit clearer. It was the neckline of a previous double bottom over here. That's the neckline, and a neckline of a head and shoulders right over here. So you pretty much just extend that into the future. And then once we do get back up into that area, it's going to be a level of course, as we are underneath it, resistance. And now we've found a bullish pattern on the weekly time frame, taking us up into that resistance, as well as the golden pocket being there. So that's why going forward, if we want to see Quant getting up to 200, 250, 300, 370 and 400 back up to its all-time high, then the biggest level going forward is this $130 key resistance. Thank you guys so much for tuning in. Like, subscribe, comment, and share so we can hit 7.5k. And if you want to get educated, listen to this clip right now and use the links underneath this video. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls. Or if you want to take action on my 6-hour-long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.